Okay, live, almost live. Oh, no, what was that? Get rid of that, start streaming, live. Ooh, what do we have here? Come on. Not made for children, there we go. Good. What is this? Nope. Ooh, TikTok, no, can't do that one. Right there, here we go, and there we go. And live. Welcome to the live chat. Remember to guard your privacy and abide by our community guidelines. Woohoo! Alrighty. All right, where were we? All right, go live. That's funny. All right, good. Everett, how you doing? I'm so glad I got notification. Mao. All right, that works. All right, here we go. Who is in the house today? Who do we have? Michelle Yankee, Mark, Plasman, Bald Guy, JDB, what's going on? T, Joshua, Scott, Reg Raw. Is that Mortigo? Oh, Mortgage Loan Officer. Okay, Walter, Mr. Bell, Yin Moy. Hello, Mr. Bell. Thank you for that. Marlon Wallace, how you doing? All right, who else do we have? Ooh, all right, G3, hello. Unlimited, hello, G3. Okay, let's get out of this. We don't want this. We don't want that. I think we want something that looks like that. There we go. Alrighty. Uh-oh, I got some noise over here from the peanut gallery. Participants, and who's in there making noise? There we go, Doug. How's it going there, Mr. Doug? So that's okay, I muted it for you. Alrighty. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for a simple, safe, predictable, consistent 1% per week. Yes, I know that's 50% per year. I know that. AJ, Marlin, Matt, Passport, Oscar, Gus, Randy, how's it going? All right. Joshua, how you doing? I'm doing great, Joshua, thank you. All right, that being said, let's get the ball rolling. What we're doing here. Greetings, Mr. Mark Stuckey, how you doing today? So, all that being said, done, fun, yay, all right, all that stuff. Anyway, so let's take a look at some stocks. Let's see what happened today. Let's line up some stuff for next week, because after all, that's why you're here, I'm assuming. Now, for those of you that are new, I'm boring as hell. Terribly sorry, nothing exciting here at all. No bright, shiny objects, no new hot stock to buy, nope. Boring, consistent. Micah Gunby, how you doing, Michael? All right, so boring and consistent. Well, I like that. I'm retired, I'm 62, which means I got to make better choices. So after years and years of trading, now yes, I've done a lot. I've done futures, I've done Forex, I've done day trading, I tried penny stocks, I tried buying options, yeah. So all those years doing all that stuff, well, I had a fallback. And my fallback was I got paid very well for what I did. I was a handyman, I made over $100 an hour doing what I did because I did it rather well. Toot my own horn if I won't, thank you. Besides the point, that was my fallback. If something ever went wrong, I always had the ability to be able to fix anything. But now that I'm retired, my trading has to be, let's say, more calculated, safer, more consistent, more predictable. I like those. Rocco, how can I generate a consistent 50 to 100,000 dividends per year? Okay, Rocco, you're new here. Okay, sit tight, relax. It's only 9 o'clock. We're just getting started. I'm here for 2 hours every night. unfortunately for you, you caught me on my Friday. Okay? So after tonight, I won't be back on until Sunday. So I go Sunday, Monday, Tuesday, Wednesday, Thursday, 9 p.m. to 11 p.m. I'll answer any questions you want, but always keep in mind where I'm coming from. Now, wherever stage of life you're in, unless you are retired and living comfortably, you are, for lack of better words, not where I'm at yet. Okay? So yes, today is Thursday. Yes, I know. But it's my Friday because I don't work tomorrow night. And I don't work, so I don't do Friday nights, I don't do Saturdays. This is my Friday night, so to speak. So as I was saying, don't get old. First thing to go is the mind. All right, what are we looking at tonight? Simple, safe, predictable, consistent, 1% per week. What do we have today? So Rocco, what I'm going to show you, simple, safe, predictable, consistent way to get 1% every single week. So to generate 50,000 to 100,000 in investment income, let's call it that, you're going to need a bare minimum of at least 100,000. Beverly, how you doing? So 100,000 at 1% every single week would generate you about 50,000 a year. Okay, for 100,000 a year, you're going to need at least 200,000 consistently at 1% every single week. Okay, now that's if you decide to do it yourself. So you need to sit back, relax, see how it all unfolds, because the strategy I'm about to give you for free, no strings attached, was created for my 9-year-old. Okay? Now, I'm not going to try to sell you anything at any point in the evening. Okay, we're all adults, we all know how it works. I am here, I'm sharing information. Yeah, I got books. Yeah, I have tapes. Yeah, I have all that kind of stuff. But I'm not going to try to sell you anything. So, you guys give me some stocks. Let's take a look at what we're looking for. My concern, I got 5 criteria. Simple, safe, predictable, consistent, 1% per week. That's my criteria. So here's my rules. Are you ready? And the rules are relatively simple. Number 1, never buy something that you do not want to own or you do not understand. If you don't know what it is, who they do, who they are, all that kind of nice, neat stuff, you probably shouldn't be buying it. Rule number 2, never sell at a loss. Rule number 3, make sure the company's consistently profitable. Rule number 4, weekly options only. And rule number 5, make sure all the numbers work. Julian, hello, my friend. I'm watching you from Niger Town, Africa. Namaste. Is that right? Namaste? I don't know what they say over there as greetings, but how you doing? Okay. So Zillsville sticks. Okay, interesting. My rule is I nake, okay, 5% a day. Good luck with that one. This is crazy. Thank you. Very good rule. Thank you, Zillville sticks. All right, I'm assuming that's right. All right, so that being said, simple, safe, predictable, we did all that. Never buy something you don't want to own. Never sell at loss. 2 decades. Make sure it's consistent profit. 2 decades of consistent profits. Number 4, weekly options only. Number 5, make sure the numbers work. Let me show you what I mean about the make sure the numbers work. Because currently, right now, AT&T, look at where we are. Okay, now I usually don't buy at the high, so I'm just giving it as an example. It's $28.97. So the closest strike price to $28.97 is going to be the 29. But this 29 expiring tomorrow, 6 March. So we don't want to do that one. We want to do the next week, which is 13 March. Now, for those of you who cannot see these little tiny numbers here, okay, the screen behind me, this thing here, that is live on YouTube. So you can actually go to YouTube, the10minutetrader.com, and see it live. That way you can see these little tiny numbers. Let me continue. Okay, the current price, $28.97, which means I would buy it first thing in the morning, $28.97. Then the magic of a call option, which allows someone to buy it from me at a certain price, called the strike price, by a certain date, called the expiration date. Alexander, how you doing? I see you sneak in there. Whoops. Okay. Certain price by a certain date. Now, I like weekly options because there's an option every single week. 6 March, that's tomorrow. 13 March, that's next Friday. 20 March, 2 Fridays away. 27 March, 3 Fridays, 4 Fridays, 5 Fridays, 6 Fridays. Every single Friday, there's a new option expiring, allowing me to get consistent weekly cash flow. So think of it kind of like a weekly cash producing asset, like a house, a rental house, or a gumball machine, a vending machine, a car that you rent out by the day, something that you can turn over and sell on a consistent basis every single week. That's why I say weekly option. Does SPY generate weekly? Yeah, it does, but I really don't like SPY. Rocco, sit tight for a second. I'm going to take a look at SPY just for you, and I'm going to tell you why I don't like it. Okay? Now, don't take my word for it. Do your own research. But I'm just going to tell you why I don't like it, and then you can, go from there and see what you're thinking. All right? So, let's do that. So, as I was saying, if I'm buying it tomorrow at $28.97, I'm going to sell the 29s, which is the next strike price. Now, that strike price has a premium that goes with it. Think of it like an insurance policy. Okay, and that premium for the 29 for next week is 40 cents. Just a little bit over 1.5% for 1 week. So why do I care about 1.5% for 1 week? Yeah, I know XRP is not so good. Sit tight. We'll get to that one in a bit. Now, the reason I'm only looking for 1%, it's simple, it's safe, it's predictable, it's easy. And we're going to get into that a little bit later on as we come across some trades that we see and we can look at them. But it's a numbers game. The stock is going up. Great. Love it. Do I like the company? What are we looking at? AT&T? Well, yeah, I do. Okay, what's the current price? Right there. So if I buy at the current price, sell it here, collect that, that's more than 1.5%, and the stock doesn't even have to move. It doesn't have to go anywhere. It can stay exactly where it is. So stocks go 3 different directions. They go up, they go down, and when they don't move at all, people call it going sideways, but they go nowhere. So it goes up, down, or just nowhere. 3 different directions. So here's the nice thing about a covered call. If I buy it at this price, sell it at that price, I collect 1%, 1.5% this week, and then I can do it again next week. And I can do it again the week after that, and the week after that, and every single week. Now, I love it when a stock doesn't go up at all, because if it goes up, great, I make my money. If it stays the exact same, great, I make my money. If it goes down, I have to make a little bit of adjustment, and I might make some money, but maybe not as much, but still some money coming in every single week from every one of my positions. So let's take a look. What do we have first? First, we have SPY from Mr. Rocco. Rocco, you're not going to like this. I don't know. Maybe you will, maybe you won't. So we're going to leave this, and we're going to go to Yahoo Finance. And in Yahoo Finance, we're going to put up SPY, and I'll tell you exactly why I don't like it. Okay? SPY, there we go. State Street Spider S&P 500 ETF Trust, SPY. Okay, number one reason I don't like SPY. Take a look at the yield. The yield, like when you get a CD. Well, our CD gives a 1.3% yield. Yay, wonderful. Okay, SPY 1.06 for the year. You hear that, Rocco? For the year. 1.06 for the year. Now, I'm about to show you how to get 1% every single week. And no, I'm not going to bait switch. I'm going to tell you exactly how to do it. And I'm not even going to try to sell you anything. Stay tuned, Rocco. Check this out. Okay, so number one, I don't like it because the yield is horrible. Reason number two, we're going to go take a look at the historical data. Historical data is basically yesterday's numbers, the day before, every single number. So, thank you for that. That was nice. Every single number associated with the opening, the high, the low, the close, blah, 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 all that kind of nice fun stuff. We're going to get there in a second. We call it the data stream. Okay, the date, the opening price of the day, the high price of the day, the low price of the day, the close, the adjusted, and the volume. All the numbers that we need. But you know what I want to look for? I want to look for specifically the profits. Because is the company profitable? Yes or no? And don't give me that crap, SPY is not a company. Well, it kind of is. There's one or two people in charge. They do this, they do that. You get a return on your money. Same damn thing, okay? All right, here we go. The dividends. Now, if you don't know what a dividend is a portion of the company's profits that they give back to the investors. And that's us. We buy the stock, we're investors, we get money. We're entitled to it because we own part of the company. Okay, so if the profits increase year after year after year, so do the dividends. So if I go directly to the dividends and see it increasing year after year after year, there's no possible way that the company can give out more money unless they're making more money. Plain and simple. Okay, adults want to complicate things? Fine, be my guest. This was created for a 9-year-old. Simple as can be. If the profits are increasing, the dividends are increasing. And I don't have to go through 20 years worth of quarterly reports. Thank you. All right. So let's go back 20 years, SPY. And just for the fun of it, Rocco, we're going to see just how often, okay, Rocco, we're going to see how often SPY has consistently increased its profits. Okay? So 20 years ago, 2006. Here it is right here, March 17th, 2006. Follow the bouncing ball. Are you ready? Here we go. 2006, 51, 55, that's higher. 57, that's higher. 79, that's higher. 55, wait, time out. 77, wait, what the hell was I? 79 to 55. That's a $16 drop on a $70 stock. That's more than 15%. 15% drop in profits. That's not good. But hold on. It actually gets worse. It does. All right. 79 to 55. That's down. 65. Higher, lower. Higher, lower. Do you see a pattern here? Lower, higher, lower. Higher, lower, higher, lower. Do you see the pattern? Up, down, 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 up, down, down. Yeah. Now, it's not consistently profitable, Rocco. That's why I don't like it. Okay, so when you're retired, okay, you get certain amount of bills every single week. Water, electric, cable, insurance, mortgage, groceries, entertainment, car payments, gas, all that crap. Consistently. Now, I don't work anymore, so my money has to be safe and consistent. That means I need to know how much I'm bringing in. So I don't do SPY and I don't do anything else that is not consistently profitable. Okay? So what do I mean about consistently profitable? Well, let's put one in that's actually consistently profitable, and you will see what I mean. Okay, this is what I mean by consistency of profitability. This is Microsoft. Okay, let's go all the way back to 2006. Okay, here we go. 2006, 9, 2007, 10, 2008, 11, 2009, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83, 91. Every single year that company made more and more and more and more money. That's what I'm looking for. I'm looking for companies that do the exact same thing. And if you got a pencil and paper, you might want to write this down. Dividend Kings, 5 decades of consistent profits. Dividend Aristocrats, 25 years of consistent profits. Now, the dividend champions also have 25 years, but the rules are a little bit different between the aristocrats and the champions. But still, a quarter of a century of increased profits. And then bringing up the tail end, we have the dividend contenders. 10 to 24 years of consistent profits. And then as a bonus, let's peek over Warren Buffett's shoulders and see what he's doing. That's 5 lists. You go to Google or Bing or whatever search engine you use. And it's a simple question. Dividend Kings List 2026. Warren Buffett's stock list 2026. And believe it or not, Google will just give it to you. So make a list of the companies you like. That right there, those 5 lists will give you about 350 companies that are consistently profitable for more than 10 years. Now, I personally like 2 decades, but you know what? Some of you guys might be okay with 10 years. Fine. Now, let's go on. So no, I don't like SPY. That was a long way around saying I don't like it. But I had to give you a reason because you wouldn't believe me anyway. Michael Corey. If someone had 1,000 shares of T at 21, would someone sell the 29s or just keep the stock? Mike, it's always going to be a personal decision. And remember, because you heard me say it before, it's not a profit until you take it. Duran Credit wants to take a look at IBM. We'll get to that in a minute. What else do we have here? Well, Apache, okay. Well, Thursday 50 index, India taken yesterday, give profits. Okay, I don't know anything about the Indian market. Sorry. Seriously, I'm sorry. I don't know anything about the foreign markets. I get way too much on my plate here in the U.S. markets. I don't know anything about the overseas. Nothing. XYZ Steve, I have no idea what that means. But okay. All right. Let's keep looking at what we got here. All right. We got questions. Okay. Coin Miner wants to take a look at Tesla. Now, I don't do Tesla because we've had this conversation many a times. Tesla does not have any dividends. So investing in Tesla is guesswork at the moment. Mike, how you doing? Cause and Astros in the house. What's going, Kramer? Anyway, I don't do Tesla because it doesn't have dividends. And the reason why I'm so adamant about dividends is I'm going to have to show you rather than me trying to tell you. Okay? Because a company that pays a dividend signs itself up for consistency, predictability, because they pay out a dividend the same time every single year. So every single year, we got CMCSA, Comcast. So over 1 million, I think they had over 64 million. Last I checked, it was like 64 million customers. 64 million people are writing them a check every single month. That's awesome. Okay, but they have their dividend on the 1st of July. So wait a minute. Yeah, they do have the 1st of July. They also have it the 1st of April. Okay, Comcast pays out a dividend, has its EX date on usually the first week of every quarter. So the first week of the first quarter, which is the first week of January, Comcast has its dividend. The first week of April, which is the first week of the second quarter, Comcast has its dividend. The first week of July is the first week of the third quarter, which Comcast has its dividend. Every single quarter, every 90 days, every 13 weeks, Comcast pays a dividend. They are predictable. So just before the dividend, the stock has a tendency to rise. So knowing that information, coupled with a trading strategy that is simple, safe, and predictable. So simple, safe, and predictable for a 9-year-old. Do you know how simple it has to be for a 9-year-old to get it and to understand it and to actually do it on her own? Okay. Well, it just so happens it's been so damn profitable. I said, you know what? I'm not going to do anything else. I'm just going to do this because put it in my situation. Okay. 62 years old. I put in 5 decades. Some of you aren't even that old yet. 5 decades of working. My very first job was 1974, Old Man Simmons Farm. Yep. Picked tomatoes, green beans, squash, corn. We did firewood, chicken, eggs, almost the whole 9 yards. He didn't have any horses. But still, okay, I was still in elementary school with my first job. Elementary school, 5th grade, 1974, 75, my very first job. So 5 decades I've been working. So at this point in my life, my little nest egg, 1% of my little nest egg pays all my bills. So I'm perfectly okay with that. And I am taking responsibility of my own money because what other alternative do I have? To give it to someone else, let them do it for me? Yeah, no thank you. All right. Who do we have here? Alexander! All good. We'll be moving all capital to Thinkorswim from Robinhood this week. Cool beans. Now, when you're transferring, I hope you're transferring it into a private corporation. That way, better yet, a corporation that's either like Wyoming, Nevada, I think North Dakota, South Dakota, or one of those, or Delaware, a state where there's no corporate taxes and total anonymity, whatever that word is. This way, nobody knows you own it, and you don't have to take any money out or make any dispersions, and there's no corporate taxes. So that's pretty freaking awesome if you do it that way. But I'm agreeing with you, wherever you're moving it from to wherever. But set it up right the first time. Because later on when you try to reset it up, they ask too many questions. Okay. Amir wants to take a look at Ford. We'll take a look at that in a minute. All right. As I was saying, there's 4 dates to remember when it comes to stock. There's 4 quarters, 13 weeks, 4 quarters, 4 dates to keep in mind. Date number 1 is the announcement date. That's when the corporate spokesman comes to the microphone and says, this thing on, hello. Basically, all they're going to do is say, hey, everybody, this is James from Dividend Stock Talk. This is how much money we made this year. This is how you're going to get yours. This is what we're going to do next year. This is what we're going to do after. Everything's going to be wonderful. Everything's going to be peachy. Everything's going to be great. It's just the announcement date where they blow a lot of smoke. That's basically it. Date number 2 is the important date. And let's pick one. There we go. Announcement date. EX dividend date. That's the second one. The EX dividend date is the last day the stock trades before the dividend is paid. So if you're eyeballing that dividend, look at them all. All these little green dots are companies paying dividends. You could grab a share of those profits. But let me continue before you jump the gun. The little green dot represents the last day the stock trades before the dividend is paid. It's called the EX dividend date. And that is called an EX dividend date calendar. You pick the stock that you like, you put it into the calendar. It'll tell you exactly when they have their dividend. So by knowing when they pay their dividend, you know when, on average, they go up in price. Now, we got kind of a thin crowd over here, so we're going to reboot this one. Sorry, you guys. But I'm gonna reboot on TikTok, so you guys gonna have to re-sign back in again. Hey, Crypto Queen. I'm gonna reboot, so don't go anywhere. Oh, no. Okay. Oh, that's what I'm looking for, right there. Okay, and we're gonna reboot. Get out of that. Do this again. Do that. Give me a couple of seconds. Every once in a while, I gotta reboot these screens because they want to make sure that I'm a real person. I'm a real boy. All right, got that rebooted. Maybe the numbers will get up a little bit. Okay. All right. So that being said, By knowing when the company is going to pay their dividend, that gives me a little bit of an edge. That is date number 2. Date number 3 is called the date of record. Whoever owns the stock on the date of record is the person who is entitled to the dividend. Bitch, moan, complain all you want. If you do not own it on this date, you do not get the dividend. Plain and simple. Date number 4 is what is called the payment date. Just when you get your money, that's all, 4 dates. That's why I like dividend stocks. If it doesn't have a dividend, I'm guessing when it's going to move. Because knowing is a lot better than guessing. Okay, guessing it might move is one thing, but looking at the dividend and knowing that it usually goes up just before the dividend gives me that little tiny bit of an edge. You got that along with the simple, safe, predictable 1% strategy that I just showed you. It's a almost can't miss scenario. That's why my 9-year-old was so good at it, because it was simple. All right, what do we have next? Hercules, you got to give me the ticker symbol for that. Breaking down the S&P 500 ETF and why to avoid it. Okay, that's just my opinion though. I bought Starbucks low and I'm up 30%. All right, Mr. Steve, thank you. Now, you do realize, Mr. Steve, okay, that the profit you have on Starbucks is not a profit until you take it. Okay, just because the stock's up doesn't mean anything. Until you actually take the money off the table, it's just basically, oh, looks good. That's about all it's for at the moment. Because even though it's up in value, you cannot take the increased valuation to the store and buy a cup of coffee. All right. Let's start taking a look at some stocks. We haven't found one yet. Starbucks. Toys R Us. Oops. All right. We already said no to Tesla because it has no dividends. JEPQ, I'm not even going to entertain that one. Hasn't been around for 20 years yet. No, thank you. Steve wants to take a look at Starbucks. Okay. SBUX. All right. Anytime I look at any stock, I'm always looking at the exact same 5 things. And it takes me 3 to 4 seconds. Are you ready? I'm going to challenge you. Here you go. You ready? The high, the low. Where was it? Where is it? Where is it going? Down, up, down, up. That's it. 3 to 4 seconds. That's all it should take. High, low was, is, down, up, down, up. That's it. So do you remember rule number 5? Make sure all the numbers work. Well, here we go. 98.69, 98.69, 98.69, 98.69. What do you think? It's up there 4 times. You think that could be the current price, 98.69? Well, it is, 98.69. What is the closest strike price? 98.69 would be the 99s, and it's paying 1.6 or $1.60 per share. So that's $160 per contract, full-time contract. What if you get 22 of them? Well, it's that number multiplied by 22. Simple. Well, let's see if it's a good trade. We want to look at the chart. What is the chart telling us? Well, we know where the high is, we know where the low is, and we know where we are right now, and we know the flow. The flow is down, up, down. Now it's going up. How much higher can it go? Well, the high is up here, 212. We're down here. We get all that space to work with. Well, great. Well, let's zoom in a little bit tighter to see if it's a good time to buy. Because that's just the 1-year chart. Gives us a rough idea what it's done for the last 52 weeks or the last year. Well, let's zoom in a little bit closer. What's the last 3 months look like? Same thing we're looking at. The high, the low, where was it? Where is it? Down, up, down, up. Plain and simple, right in front of our face. What are we seeing? We're seeing 3 or 4 different things. We're seeing the high, we're seeing the low, we're seeing the motion. Where's it going? Okay, what do we have here? Viewer wishes early in your live can make interactions much smoother. Okay, It just popped up on my screen. It's giving you the flow and the momentum. Look at, okay, down, up, down, up, down, up, down, up, down, up. Look at the most, it's like a week apart, each one. So where are we now? We're going up. Great. Well, let's get out of there. Let's see what it looks like. This could be number one for the day. Where are we now? We're at 99. No, actually, we're at 98.69. So we're going to do the 99s. All right. So here's all the trading strategies. We're going to pick this one right there. Covered call. It's simple. It's safe. It's predictable. Okay? Now, when I say it's safe, it is so safe that the federal government allows you to do this type of trade in your IRA. Holy cow, we're still up 50. Oh, that's never been at 50. Okay, anyway. It's so simple, you're just buying the stock and then you're reselling it all at the same time. So I'm buying my stock first thing in the morning, I turn around and I sell my covered call all at the same time. Because I want my profit and I want to know what it's going to be. And I want it to be consistent every Friday or every week. I want to get some income from every position every week. That's why I do weekly options. Only when you understand them and you keep your eye on them are they okay. Okay? But for the most part, if you don't understand them, don't play with them. Okay? And I don't buy. I'm a seller. So I sell, and whoever's buying, good for them. Whatever reason they're buying it, good for them. I'm glad they're there. They're helping me live my nice lifestyle. All right, here we go. The current price, $98.69. The 99 right there. Now, remember, I only want to do one contract because then you'll have an idea of how much you can afford, okay? Here it is. Now, I always encourage people to read it out loud so you know what it is you're doing. And again, for those of you that are new here, this screen is live on YouTube, okay? And it's currently being recorded, so say nice things. Here we are. By one covered call, Starbucks, 13 March 26. That's next Friday, meaning this option is going to expire, become worthless next Friday afternoon at 4 p.m. The 99 call option, 203 is the maximum profit. Do you remember I said simple, safe, predictable? I know what my profit's going to be before I even do it. Now, for me, that's great because am I making enough money to offset the risk? Well, for me, I don't really look at it as risk, okay? Because I've been doing this long enough to know that if I only invest in good quality companies, okay, I've seen and I've been in the market long enough to see a lot of crap. See, I was there for the crash of 2000. Remember that? That 1999, the Y2K crap, remember that? And then I was there 2001 when they had a crash then. 2008, they had another crash. 2021, they had another crash. Last year, another crash. Okay, I was there for all of it. I watched it happen, okay? So I kind of have a good idea of what I'm doing, and I'm okay with what I'm doing. But I'm not telling you to do it. I'm showing you what I'm doing, then you guys can decide whether or not it makes sense to you. Because out of everything that you get from tonight, number one thing is, does it make sense? That's the number one question I want you to answer for yourself. Does it make sense? It's a yes, no question. It either makes sense to you or it doesn't. What are the list for the top dividend stocks? Brandon, we just said that. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. That's 5 lists right there. Michael, I still remember the canned tuna from Y2K. Oh, wow. All right. So, remember I said simple, safe, predictable. I know what my profit's going to be before I do anything just to make sure the numbers work. Remember rule number 5? Make sure all the numbers work. What am I buying it for? What am I selling? What am I bringing in? What's my rate of return? To find that out, we're going to need a calculator. Come out wherever you are. Come on, Cal. Here we go. All right, so we're going to take the max profit, 203. Okay, 203. And then we're going to divide it by The cost of the trade, including commissions and fees, $9,697. Now think of it this way. Okay, 9,697 gives me a grand total of 2%. Okay, so think of it this way. You can, in your mind, create whatever illusion you want to make it easier for you to understand. Think of it this way. Let's say, hypothetically, this is a vending machine. All right, and I want to, have sodas or candy or potato chips or whatever. It's a vending machine. It's going to cost me a certain amount of money. Let me get rid of this bright light behind me. It's going to cost me a couple of bucks right up the front. It could be a house. It could be a car. It could be anything that you can rent out on a weekly basis. It's going to cost you something up front. You have to have some skin in the game, something to bring to the table. After that, you rent it out every single week and you get a rate of return until you sell it for a profit, which basically is the same amount of money you paid for it, or in this instance, okay, $98.69, I'm going to sell it for $99. It's a small profit. It's not really what I'm looking for. I'm looking for specifically the cash flow brought in from selling weekly call options. And I know it's risky. It is very risky if you don't know what you're doing. You should never, ever do something you don't understand. Now, buying and selling stocks, that's easy. Okay, everybody understands that. You buy low, you sell high. Well, here, I'm buying and I'm selling at the exact same price I paid for it. And I'm collecting the insurance policy number, money. Because that's what a call option is. It's an insurance policy. And for an insurance policy to be valid, you need 4 things. Number 1 is a beginning date. That's when I buy it. When I buy the stock, first thing tomorrow morning. Number 2, the ending date. That is the expiration date. 13 March 26, which is next Friday at 3:59 p.m. Number 3, consideration, money, something of value. $203, consideration, option premium. And 4, it's called meeting of the mind. That's the technical word, meeting of the minds. That means 2 people making an agreement. I'm selling, you're buying. You're paying me this, I'm selling it to you for that. That is what it is. Okay. I have no idea who's calling me this time of night. They should know that I'm... Okay, anyway. So, I'm collecting the premium every single week. 1% every single week. That's my goal. So, wherever you're at in your journey, if this helps out, great. Hopefully it helps out. So, we're going to save this one because it is 2%. All right, so let's save this one. The first one of the night. Yay! First one of the night. And it's Starbucks. Woohoo! There it is right there. There we go, right there. Starbucks. Whoops. That's not right. That's a little better. Starbucks, 13 March, that's next Friday. The $99 call option, that's the strike price. Remember, you need a starting date, an ending date, consideration, and an agreement between 2 parties, meeting of the minds. 203 is the profit, $9,697, let's call it $9,700 is the investment. Okay, so that's a 2%. Now, what if I could get 2% every single week? That's over 100% by the end of the year. Now, do I tell people that? No. People freak out when I say I make over 20%. So I have very difficult conversations when I tell people I make over 50% every year. Enza, how you doing? All right. All right, so that's number one for the evening. Who's got something else good? Ooh, do you remember this song? Tell me something good. Tell me that you like it, yeah. Tell me, tell me, tell me. Dave wants to take a look at Macy's. Now, I love Macy's. I do. I've been trading Macy's for the past 8 years. It's been very nice to me. Let's take a look at the numbers. The high, the low, where was it? Where is it? Look at this. Down, sideways, up, down, up. It's turning right there. It's top of the air. She dropped. Now she's going back up again. Yes, that's what I'm looking for. Let's zoom in and see if it's better. Bob's 2%. Yes, Bob, 2% this week. That doesn't mean I'm going to get 2% next week. It just says 2% for this week. And if I hit my target, great. My 2% and get my money back, and then I'll do it again with a different company. If it goes down, great. I like the company. I'm going to keep it anyway. And then next week, I will sell another covered call and bring in another percentage. Is it going to be 2% next time? Maybe, maybe not. We won't know until it comes. Because whether we like it or not, Bob, Friday is coming. So we got Friday tomorrow. And then after tomorrow, Friday's coming again. Every single week, after week, it's the same thing. Even on vacation, week after week after week. It's coming every single Friday. So, Macy's, 19. The 19's going for 65. You knew that's over 3%. Yeah, we're going to look at this baby 30 days ago, which would be the 5th. Here we go. Check that out. 30-day high, drops, bottom, 2 days up, right there. So yeah, this baby opens up higher, I'm jumping in. You can take a look at all my videos in the past. I don't claim to find bottoms, okay? I go 2 days, bottom, 2 days up. On the third day, I jump in. I say the exact same things every single night. You can go take a look at my videos from 15 years ago. I say the exact same things because if it ain't broke, don't fix it. Holy cow, 40, wow, that number's terrible. All right, so let's take a look at the 19. Let's see what it looks like. Get rid of this. Change over to here. The 19, there it is. One contract. What are we doing? Here we go. One covered call, Macy's. 13 March, that's next Friday. The 19 call option, $50 is the profit, $1,800 is the investment. So what rate of return is that? Well, let's look. Calculator, $50 divided by 1,850 bucks. That gives me a grand total of 2.7% for 1 week. So the question you should be asking yourself, number one, does it make sense? Number two, do I like Macy's? And number three, do I like Macy's at this current price? Maybe question four, how long am I willing to hold on to Macy's? Am I willing to do this every single week with my Macy's stock? Do I believe in the company? Yes or no? Because after all, it's your choice. Your choice to put your money wherever you think you need to put it. It's up to you, okay? So, I like 2.7%, so I'm going to save this one too. This will be number 2 for the night. And there we go. Oh, camera. All right, where are we? I get rid of some of these things. Hate it when it does that. Come on. Hate it when it does that. I do. Now that was 2.7. Let's delete that. Let's go back to here. Wait for that thing to open back up again. Is she open? There it is. right there. There we go. Macy's, 13 March. That's next Friday. The $19 call option. $50 is the profit. $18.50 is the investment for 2.7% for 1 week. Nordstrom's went private, which took them off the big board. Yes, we did Nordstrom's a couple of years ago also. I think our lineup was something like this. It was Macy's, Nordstrom's, Walgreens, Kohl's, and U.S. Steel. All of them paid super awesome premiums every single week. We did Walgreens for 18 months. Can you imagine that? 18 months. 4 to 5 weeks a month. 18 months. It was it was nice. Let's look at it that way. But we have replaced some of those with some new ones. All right. Oops. What did I say this one was? 2.7. 2.7. All right, so 2.7. That's pretty good so far. John Behay, Nordstrom went private. Yes, it did. What about IBM? All right, let's take a look at IBM. IBM. Didn't we look at IBM last night? I'm pretty sure we did. Nice. Look at those numbers. The high, the low. Where was it? Where is it? Down, up, down, up, down, up. You cannot argue with what you see. You can't argue with the numbers. Okay? Down, up, down, up, down, up. You can look at any chart you want. Those are the high. Those are the lows. Here's where we are right now. It is in an upward trend. Argue, argue, argue all you want. That's the number right there. 256.55. The 257s are going for 530. That's almost 2% also. Can you imagine? Bob's, yeah, 2%. 2%. I'd love 2%. Now, Bob, to be honest with you, I average 1.4. That's about it. John Bohay says a double bottom on IBM. Yeah, I see that. All right, last 30 days. Here we go. 30 days ago. There's the high. There's the low. There's where it was. Here's where it is. Look at this. Down, up. You cannot ask any better than that. Okay, so what does it look like? Let's get rid of this. We're going to do it at 257. All right. 257. And there it is right there. 257. There we go. One contract. La, 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 la. And here's Johnny. Buy one covered call. IBM 13 March 26th. That's next Friday. 257.50. It's currently at 256.50. Okay. Look at what we're bringing in. $601. What's my outlay? What's the cost of the trade, including commissions and fees? Well, it's $25,000. Okay. Doesn't really mean anything. What is my rate of return for that 1 week? Michael, we'll look at Intel next. Sit tight, okay? Here we go. Profit, 601. Investment, 25,149. Gives me a grand total of 2.3. I like 2.3. 2.3 works great for me. I would love to get 2.3 every week. Sorry, my average is only 1.4, but I'd like to get 2.3. Okay. IBM, 13, blah, 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 blah. All right, let's save this one. Look at that, 2, 2.7. The next one's 2.3. Here we go, right here. There it is. IBM. 13 March, 257.50. Profit 601. Investments 25. 2.3% for 1 week. If, of course, you like IBM. $2.3. All right, we need 2 more. We got an hour. We got to find 2 more. 5 a day. What do we got? What do we got? Okay, Mike wants to take a look at Intel. Sit tight. Freckle Queen, how are you today? Enza, how many contracts do you do in a day, or is that private question? I'm so curious. Okay, Enza, you got to remember I got 7 different accounts to manage. Okay, I have one account of, I'm thinking off the top of my head, I must do at least maybe 225 contracts a week. Yep, mine's all weekly. Okay, I'm not a day trader. I don't trade on a daily basis. Very rarely will you see me buy and sell on a Tuesday, Wednesday, or Thursday. Very rarely, because I want the most money for my buck, which means investing Monday morning, selling the covered calls on Monday. A higher rate of return. I mean, that's basically what I'm looking for. Now, I'm not looking to invent the new mousetrap. I'm not looking to hit a home run. I'm just looking for the boring consistency of 1% a week. That's it. All right. Thank you, there's Mr. Steve. Hercules, you got to give me the ticker symbol for First Citizens Bank. Okay? Because that doesn't mean anything to me. Katamatu, how covered calls work? Very simple. If I buy the stock, I buy a company. Here's an idea. I buy a cup. Okay? I buy a cup, I own it, I can do whatever I want with it. Now, let's say hypothetically you want to buy it. So you buy an option to buy it from me. You don't give me the whole money up front, just a small little smidge, like 1% up front. You say, hey, I'd buy that from you between now and Friday for this price. Same thing. Same thing. I'm buying a stock. I'm selling somebody the rights to buy it from me at a certain price by a certain date. Okay? And for that, they give me a premium or a little bit of money. It almost feels kind of like the mafia. Yeah, I don't care what you do. We just want a little taste. You know, we just want a little taste. All right, anyway. Yeah, so you buy the stock first. You sell someone the rights to buy it from you. A certain price by a certain date. It's like you're pre-selling something. The one. Hello, Mr. David. Well, hello to you too. I have no idea who David is, but all right. Mamam Ahmad, any new coin? Not yet. We got 3 of them that we're working on. We're working on the final draft. In case you guys are wondering, yes, I am creating my own 3 cryptocurrency coins. I'll explain it as it progresses, but hypothetically speaking, we're working on the final designs, and we're still trying to find a place to get the RF microchips. What's the biggest risk? Gee, the biggest risk is going to be hitting the wrong button at the wrong question at the wrong time. Now, I say that almost once or twice a week. Okay, most people lose money by hitting the wrong button. Doesn't that sound so childish? But think about it. I don't care who you are. I don't care how good you think you are. You are, at some point, going to hit the wrong button, causing you to lose money. And then you're going to kick yourself in the butt because there's no one else to blame but you. You will. I don't care how good you are. Okay, hold on. We got somebody making noise in the background over here. John, you forgot to mute yourself there, John. There we go. I took care of it. There we go. All right. So anyway, that's the biggest risk. Hitting the wrong button. Okay? You don't think you're going to do it? Fine. People make mistakes. Okay? Now, the strategy is a sound strategy. We've been doing it for over 16 years. And yeah, I do have supporting documentation online showing you the trades that I've done 13, 14 years ago. Larry Kudrow said tonight, stock market is going to soar in a couple of weeks once the Hormuz Straits open up. Okay, lovely. Hey, Austin, what's happening? Mr. Green, we're going to get to McDonald's in a bit. Okay, XYZ Steve, O Realty, you're up 20%. Good for you. All right. I don't like O Realty. I'm going to show you why. Hold on a second. I used to get asked about O Realty every single week, but I thought those three guys disappeared. We already saved this one. We don't need this anymore. Let's get out of that. Get out of that. Get out of that. Back to the starting point. Here we are. Okay. So, Mr. Green wants to take a look at Mickey D's. MCD. Mickey D's. Ouch. I'm going to say no to Mickey D's this week. Here's the reason why. Are you ready? 30 days ago, we're down at 310. We soar up to 342. That's a 10% increase. 30 days ago, 10% increase. Now you have your profit taken. You can call it whatever you want. Okay, I've been trading long enough to know that if your 30-day bottom is at 310 and your 30-day high is at 342, that's a $32 jump. Now she's dropping. Yeah, I call that profit taking. If it's up over 10%, susceptible to profit taking, goes down. Plus, McDonald's has a negative book value. Ouch. Thank you for that, Twisted Parks. I haven't seen you in a while, dude. Either that, you've been keeping quiet. Okay, watching in the shadows. Stocky, creepy. Yeah, I know you, Twist. Just kidding. How you doing? Okay, so Mr. Steve wants to take a look at O Realty. Now, I don't do O Realty for one main reason. It's a monthly option. March, April, June, September, December, January, March, January 2028. I don't do monthlies because you can only do them once a month. That's why they're called monthlies. So I don't know about you, but I don't live 1 month at a time. I live 1 day at a time, and the closest I'm going to get to any time of trading on something that is consistent and predictable is weekly options. That's why I do weekly. I don't do monthlies, and O Realty is a monthly. So, no, thank you. Oh, that was terrible. Hey, James, you often mention having developed this strategy for your daughter. What about your son? Mr. Vigilante, here's the thing. I got 4 kids. Okay, 2 boys, 2 girls. Okay, 2 boys, no interest in money whatsoever. However, my oldest is 30. Hold on a second. This is going to take some math here. He's 36, or is he 37? I don't know. My oldest son's 37. My youngest son is 32, which means my daughter would be 26, going on 27. So here's the thing. And the other one is 28. So in 2009, my 9-year-old says to me, Daddy, what are you doing? Can you teach me? Now, I offered to teach the boys and the other girls. Nope, no interest whatsoever. So she asked, I delivered. So, nowadays, my children are now entering their 30s. The 20s are done and over with. The partying phase is gone. So now they're starting to be responsible, getting married, having children, buying houses, and settle down. Now they're interested in money. So in the next year or so, they'll all be joining me, and we're running on one big happy corporation. Everyone will be happy. All right, so, O Realty, I don't do it. I don't do monthlies. That's the answer. Only one of my children was interested in money. The other 3, no interest whatsoever. Well, not until now, because now they're in their 30s and they're realizing after a decade of being kicked around by employers, because I've been telling my children for decades, profits. Okay, this is something you might want to write down or you might want to remember. Okay, listen closely. Profits are better than wages. Let me say it again. Profits are better than wages. Because your profits can be unlimited, but your wages, they're stuck in one place. So profits are better than wages. All right, next one we're looking at. We looked at McDonald's. Okay, that's T-shirt. Odom, I'm not quite sure what that means, but alrighty then. Bullish, bearish for tomorrow based on today's dip. Hancho, I'm a little bit more of a structured trader. That means I only buy and sell certain stocks. Now, we check every single week. Profits are better than wages. Oh, ooh, that's a good idea. T-shirt. All right. I'm going to write that one down. Yes, I'm that old. I have to write that down. All right. I write slow. Leave me alone. I can hear you guys complaining I'm going too slow. Yeah, I write slow. Mighty Bargain, how you doing? Okay, so, yeah, I don't do that one. So give me something else. Give me something good. Tell me that. Short Scratch was our racehorse. Okay, not quite sure what that means, but alrighty then. Thoughts on O Realty? I gave you my thoughts on that already. What is he doing? Okay, thank you there, Mr. Steve. Outlandish. Lyric Nicole, I can't read that one. Chewy, Odom, come on. Chewy hasn't been around for even 10 years yet. EMB killed still with plenty of room to go. Big Brain, how you doing today, brother? Let's take a look at your EMB. Oh, look at that. Now, I hate to be the bearer of bad news, and you're probably not going to believe me anyway, but you get your bottom down here at $50 30 days ago. She shoots up to 54. Now, from 50 to 54 in the last 30 days, that's just shy of 10%. But profit taking has already started. Wednesday is lower than Tuesday. Today is lower than yesterday. So it topped out right there. Now it looks like she's coming back down. That's what it looks like. That doesn't mean what it's going to do. But let's take a look at the seasonality chart and see what that says. Okay, for those you don't know what a seasonality chart is, it represents a whole year. January 1st, December 31st. This is the whole year, 10-year average movement. Up, down, up, down, up, down, up, down, up. This here, the blue line, represents the movement for this year. You can clearly see she dipped in January, shot up. Now she's starting to pull back. I can zoom into that and give you a better look. But historically speaking, okay, there's today's date right there. Up, down, nice, up. Now she's coming back down again. Basically what she's done over the last 20 years. Okay, that's historical performance. That's what it's done year after year after year after year. You may like Enbridge, good for you. My personal opinion, number one, I'll never trade it because it's a monthly. That's number one. Number two, it basically looked like she's coming down. And what I always said, okay, it ain't a profit till you take it. You say you're up 30%, up, down. Oh, look what happened. Look, it went up, it came back down again. That's what stocks do. But hold on, because once she went up, she came back down again. Now she's going up. Look at this. 2 days in a row, she's starting to come down. Now, I'm not saying to sell. I'm just saying, you got a 30% rise? Great. Eventually, the choo-choo is going to stop. Okay, if it was worth $100, it would be at 100. It's at 53.88. It didn't even hit 54.50 yesterday or at all this week. Do charts really predict anything? No. Hold that thought for 1 second. They don't predict, they tell you. Okay, now I'm going to explain in a second. Let's see what we have down here. Okay, Brandon, I don't do Tesla because it has no dividends, so it's not very predictable. It's very unpredictable. That's why I don't do it. Have a good night, sir. Big Brain, thank you for chiming in. I wish you luck with Enbridge. Leroy, ExxonMobil. XOM. Okay, yeah. So anyway, for those of you curious, me and Big Brain have a little argument. We've been going on for the past couple of months. He loves Enbridge. He does. He gives me a hard time every time he comes on because it jumped up so much. Fine, good for him. Yay. But besides the point. Thank you there, Mr. John. Give me a second. We'll take a look at those. Right now, Leroy wants to take a look at ExxonMobil. Now, I'm going to say no only because we hit the high just the other day. So what does that usually mean? That usually means she's going to come down. Usually. So with that much turmoil, that much uncertainty, no thank you. Now, don't get me wrong, Leroy. If you're at a point in your life where you can take risks, hey, I'm not going to tell you what to do. I don't take risks, okay? So what I do is very unflattering, very unsexy, it just doesn't have that sparkle. Terribly sorry, okay? It's boring as hell. It's monotonous. It's repetitive, but also it's consistent and it's predictable. Sorry, I'm just at that point in my life where I'm more of a turtle than a rabbit. The turtle and the hare story. Okay, anyway. So no for this week, Leroy. Now, don't get me wrong. I do like ExxonMobil, but the uncertainty here has no real direction. So with no real direction, I don't have that safety factor that I'm looking for. Okay? Now, maybe at some point in time. Now, I did buy Exxon many times in the past, and I will again eventually once this chaos disappears. Because remember, I'm looking for consistency and predictability. So at this moment, ExxonMobil's a little unpredictable, so that's going to be a no. Bro, how much taxes do you pay weekly on 30%? Rajat Thali, I want you to listen very closely, okay? Just because it looks as if I make 1% every week, which is over 50% per year, you're making the assumption that I'm volunteering to pay taxes. Here's the thing. When you set up your trading account, it is your responsibility to set it up in a way that benefits what you're trying to do. So, Rajut, what I am trying to do is increase my, let's say, my legacy for my children and my grandchildren. When I'm gone, I like to leave all this money behind for them with clear-cut instructions on how to do it. So, that being the case, I don't own anything. It's all in the name of the corporation. And the corporation is registered in a state where there are no taxes. So, think of it that way. The corporation makes 50% per year and there's no corporate taxes. So guess what? I don't have to pay taxes. Okay? And then for my living expenses, if I borrow the money from my corporation, it is a non-taxable event because there's no taxes on borrowed money. Okay? Anyway, that being said, let's keep the ball rolling. So there's a lot of different ins and outs about that, but it's your own responsibility to set up your account in a manner which best suits you. And you should never listen to some guy on YouTube, but whatever channel you're on, but you should take a look at what are other people doing, just to give you an idea. So if you don't want to pay taxes, don't put it in your own personal name. If it's in your own personal name, yay, good for you. You pay the absolute highest amount of taxes there is because you volunteer to do that. If you set up a corporation, an LLC or something to that effect, well, now you're being taxed at a corporate level. If you choose to do it in your state, you're at the corporate level of your state. Now, if you create the corporation in, let's say, Delaware, Wyoming, Nevada, or one of those states where there's no corporate taxes, well, guess what? You don't have to pay taxes. So it's your money. You do what you think is best for you. But when you ask me about how much do I pay in taxes, that reminds me of the guy who goes to buy a Rolls Royce and say, yo, what kind of gas mileage does this thing get? If you're worried about taxes, you're asking and you're listening to the wrong people. That's all I got to say to that. You need a tax strategist or a tax planner to help you legally stop paying taxes. Key word, legally. Okay, That's what I thought. Thank you, Leroy. Okay, J Mass wants to take a look at DPZ. I have no idea what that is. DPZ. We still need to find a couple more. DPZ. Domino's Pizza. No. Sorry, J Mass. I don't do monthlies. A monthly option is an option that trades on a monthly basis, once a month. Yeah, no thank you. Rule 4, weekly options only. All right. John Wen, W-E-N. Oh, that's Wendy's. Okay. Well, if you really like Wendy's, I mean, really like Wendy's, check this out. The high of the year was 16. That was a year ago. This did not, hold on, let me get there. Okay, this did nothing but drop. Yeah, if you really like Wendy's, let it find the bottom. Let the bottom show up. We thought it was here. She went up, now she's coming back down again. Because she dropped so much throughout the year, people say, well, this is bouncing off the bottom. There it is. Now she's keep going down. If you like Wendy's, I personally don't like it because the numbers just don't work for me. Leroy, Gab. Leroy, I never heard that before. G-A-B. Leroy, when I said rule number 4, weekly options only, Gab, no options, no thank you. GLW, Montreal. Oh, wait, Monroe. Monroe, Jersey Talk. Okay. GLW, isn't that Corning? GLW, Corning. No, same thing. It topped off a couple of days ago. Now it's dropping. So why would we want to buy that? Look at it. 30-day bottom, 30-day top. Now she's got profit taken maybe in a week or so. So let's write it down for next week, GLW. Holy cow, I got way too many for next week. GLW. So we'll look at it next week. That what I thought. All right, Mr. Leroy. Oscar, thank you for that. Farmer Dan, Roth IRA. Oh, if you like a Roth IRA, you know, more power to you. You could put it into a corporate pension fund. So if you have your own corporation, all the a corporate pension has to be available to all corporate employees. So if you have a family corporation, yeah, the wife or the husband, whichever, you guys can play swappy changey. Someone's the president, someone's the vice president, someone's the CEO, someone's the CFO, someone's the treasurer, someone's this, someone's that. You can even hire your kids, you know, to do work for you, and that's a tax write-off also. But if it's in a corporation, you pay corporate taxes, not personal taxes. And it has to be available to everybody in the corporation. All right. JB Titan, good information. Glad you like it. V6NT, would you sell NVIDIA? I wouldn't even buy NVIDIA. I don't like NVIDIA. The numbers are horrible. Katamatu, do you do this in a personal account or an LLC? Actually, it's a Chapter C. Yeah, it's a Chapter C corporation. He goes back and forth. He did read here a little bit ago, but it seems more active over there. Yeah, I don't think he reads from these comments. I think he reads from TikTok. Okay, John, there weren't any comments. The last comments I got was Tesla, please, and I said no to Tesla. And then Amir wanted to take a look at Ford, and I said we already looked at Ford yesterday. Didn't look good, so it ain't going to change today. So your comment, I don't think he reads from these comments, is the first comment since I last saw it. So, yeah, I do. I go back and forth. But you guys aren't very active there on YouTube, so there's not very much for me to comment upon. Do you trade covered calls on the weeks the dividends are announced? Absolutely. Jack, I make no distinction whatsoever on the events. Okay, it's either I like the company and the chart is telling me it's the right time, or I don't. Okay, I love a good company, especially. Monroe, yes, crazy option premium. Uh-oh, I'm missing something. GLW, okay. Unfortunately, GLW is coming down at the moment. So that's going to be a no. The 134.74, the 135s are going for 475, which is over 3%, if you like Corning. But I wouldn't be buying Corning until it finally stopped falling, because it's falling, 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 falling. Where's the bottom going to be? Don't know. Okay. Road Choreo, NOC. What is NOC? Northrop Grumman, really? That's NOC? Oh, that's why, because I don't do this one. Okay, this is a monthly. Okay, March, April, May, June, August, September, December, January. Yeah, that's monthly options. I don't do monthlies. Sorry, Road Korea. Ooh, Mario wants to take a look at Clorox CLX. Now, Clorox, again, over 100 years old. It is a dividend king, but it's also a monthly. So there's a certain strategy I would use with that, and this is not it. Not for that company. 827 Nate. Thank you there, 827 Nate. So Mario, I do like Clorox, but I wouldn't do it with this strategy. I do it with a different one. Did you do this in a personal account or an LLC or subchapter S corporation? Dad, giggling, Harden. I got one, I believe, Home Depot. Ooh, Alfredo. Ooh, I like Procter & Gamble. John, but hey, we'll give that in a minute. Hold on a second. Harden over here came up with Home Depot before you did. So here we go. Now we're going to say no to Home Depot only because it's in a downturn doing some bottom fishing. So we'll put Home Depot on the list for next week. But look at it. 30-day top. As soon as that 30-day bottom shows up, I want to jump in. I love Home Depot. Home Depot is a dividend king. You know what a dividend king is? 5 decades or more. Let me explain it this way. 10, 20, 30, 40, 50 years or more of consistent increasing profits. Home Depot, Lowe's, any dividend king that's got a weekly, it's a no-brainer for me. Is it the right time? Well, look at this. The top, here's the bottom. As soon as that bottom shows up, turns around, I like 2 days to the upside. On the third day, I would jump in. That could be, right here could be the bottom. Maybe tomorrow could be the bottom. We won't know until it shows up. So much for Home Depot, but I am going to put it on the list to keep my eye on it next week. It's already on the list for next week. Okay. Ab good side. I don't know about the options. Yeah, Mario, Clorox. It's monthly. Sorry. Alfredo, Procter & Gamble. Love Procter & Gamble. Another dividend king, over 100 years old. Unfortunately, same scenario with Clorox. We're going to wait for the bottom to show up. 30-day bottom right here. Shoots up to the high. Here's your profit taking. As soon as profit taking is done, this baby will turn around again. Because that's what stocks do. They go up, they go down, they go up, they go down. That's it. Cause and Astra wants to take a look at Mara, M-A-R-A. Same thing. Now we saw this one coming a mile away. She dropped like a rock, slowly going up. Now she went from 650 to 950. That's a 50% increase. So yeah, she's coming back down again. So Mara, most likely not next week, but in 2 weeks, Mara will probably look better again. So we'll write it down. We'll take a look at it again in 2 weeks. And here we go. Next. Pretty simple, right? Next. ISRG. John, let's take a look at that. ISRG. Intuitive Surgical. Interesting. Look at the chart. The high, the low. Where is it? Where was it? Where is it? Down, up, down, up, down, up. It's definitely going to the upside right now. Look where we are. 496. The 497s are going for 760. That's over 1.5% if you like this company. And it's always going to come down to that if you like this company. All right. Let's see what the last 30 days look like. I don't know. No real rhyme or reason. 30-day high, 30-day bottom, up, down, up, down, up, down, up. Maybe. Is that what it looks like? ISRG. Let's see. Now this one's going to hurt a little bit because it's a $500 stock. So let's see what it looks like for those of you that have the means of doing $500 stocks. Now I do, but I just don't do it because I can make the same amount of money off of a $30 stock as I could with a $500 stock. And then the more money you put in, the less diversification you have. But hey, I have no idea how much money you got. So the 500, there it is right there. Okay, one contract. Here's what she sounds like. Here we go. One covered call, ISRG, 13 March. That's next Friday. The $500 call option. Max profit, $11.45. The investment, cost of the trade, including commissions and fees, $48,855. Let's see what the ROI on that is. $11.45 divided by 48,855 equals 2.3%. I don't mind 2.3%. Works for me. But do I want to put 50,000 into just one contract? 2% is 2%. Whether you're working with a $20 stock or whether you're working with a $500 stock. Now there's literally anywhere between 5,000 and 50,000 people will come through these 9 different channels. There's 9 different channels that we're live on. So anywhere between 5 and 50,000 people come by. That number, does it make sense? I forget what the hell I was talking about. Oh, we all have a different amount of money to play with. When I started out 30 years ago, I only had $12,000. 30 years ago. Okay, I took out a second mortgage, and yeah, I spent about a week on the couch because the wife was pissed. Seriously. Okay. How do you start? Ralph Jude, how are you doing today? Hey, Ralph, I got an idea for you. Now, I'm offering this to you, no strings attached. Drop me your phone number. I'll give you a call. You and I can chat. And I promise you, 100%, I won't try to sell you anything. Because it's not what I'm here for. I'm here for education and entertainment. La, 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 la. Okay. Anyway, besides the point. All right, so, do you like it? Does it make sense? It's 2.3%. Let's save it. Just in case you got enough money, you know, $48,000. So we saw a couple of trades earlier. That's like $800, $1,500. This one's $48,000. For those of you in a different game. Okay, when I first started, I started with $12,000. I was in a low game, and then as the years go by, bigger and bigger and bigger positions. Ralph Jude, hello, my friends. Thank you so much. All right, looking to hear from you. Queen Styles, how are you today? Is she pissed now? See, Odom, no, she's not pissed now. She's happy for me as she's living with her new boyfriend. All right, so we're going to save this one. I'm wondering if I already did this. If I did, it's going to come up twice. It'll come up twice if I already did it. Not a big deal. There it is right there. Oh, so I already did it. All right. There it is, ISRG. ISRG. 13 March 26th. That means this option is going to expire worthless next Friday. The $500 call option. Well, the stock is currently at $4.95. That's pretty close. Look at the profit. $1,100. Well, look at the investment. $48,000. It's a different game for a different player. And if you're just starting out, you will eventually get here. It's just a matter of time. Now, I thought the same thing when I first started 30 years ago. I'll never get there. Am I ever going to make money? There's always, see, this is one thing I had a hard time accepting. I did. Okay, it took me a long time to accept this. there's always another trade coming. You think you're missing out on something. Okay, fine. Big deal. There's always another one coming. You take a look at now I've been doing this for 30 years. You take a look at all the hot stocks that came and went, and how many actually stuck around over the last 30 years since I've been trading. There's always one coming. So whether you're doing this for a week, a month, a year, 2 years, 3 years, doesn't matter. You need to consistently do it because it's your money. You're going to give it to someone else or you're going to learn to do it yourself. Hey, buddy, hope all is well. How's Bank of America? We'll take a look at that in a minute. Should colleges introduce paper trading competitions and grade students by their returns? It's a little bit more than that, because nowadays a lot of people are using artificial intelligence to find their trades. It's simple, it's easy, but you're relying on a computer to tell you what to do. So you're not thinking for yourself. So if the college is going to introduce something like that, you'd have to rule out the interaction with artificial intelligence and have them do it paperwork. Like get them the Wall Street Journal. Say, here you go, the paper one, you know, the Wall Street Journal. Each student, the Wall Street Journal. Here you go. What do you come up with? And then do your research. But the trading has to be done by hand without the assistance of a computer. And you have to have solid information to back up your theories. You know, because right nowadays, years ago when I first started trading, I used to do everything longhand. Okay, and it took me hours to find out the information that I have nowadays. But I remember 15 years ago, I said, you know what? Computing has gotten so good, let's dig into the data stream and see if we can find anomalies to help out the trading. So we did, and we created this really cool software, and it worked great. Until Yahoo decided to change how they store their information. And once they change where the information is being stored, the software no longer works. And the person who I paid to do it, well, they've been doing it for so long, now they want an astronomical amount of money. I said, you know what? Keep it, don't even want to bother with it. But as things change, so is the trading going to change also. And yeah, people are making a lot of money using computerized trading. It is what it is. I'm old school. I will never, fully give up the accountability of my own personal choices. All right, YOLO. Okay, Alfredo Pup. We're looking at Procter and Gamble. Okay, we just finished this one. Procter and Gamble's next. PG, Procter and Gamble. Ouch! We're going to say no for this week. Don't get me wrong, Procter and Gamble is a dividend king. Remember, 5 decades of increased profits? This is another one. But this one, whoops. What do we got? 2.3. All right, let me finish this up. Hate it when it does that. So we're going to look at Procter & Gamble next. We got 20 minutes left. And then my weekend starts. I don't do Friday nights anymore. And I don't do Saturday nights anymore. So as soon as we're done tonight, I won't see you guys again until Sunday. All right. 2.3. Where did you go? Whoops. $2.3. Next, low battery. Let's play swappy change with the battery cables. I don't know why. Nobody's ever on here. All right, let's keep on keeping on. What do we have next? ISRG. Okay, a YOLO wants to take a look. Royal Caribbean Cruise Line. RCL, Royal Caribbean Cruise. Ooh, pulling back also. And don't get me wrong, I do trade this once in a while. Take a look. The high, the low, where was it? Where is it? Look, it's down, up, down, up, down. It's going to find the bottom eventually, then turn around. I'm going to say 3 to 4 weeks from now. So let's put this out for 3 weeks from today. RCL. GD wants to take a look at Kohl's. Interesting. Not quite sure where this is going to go, but looks interesting. The high, the low, where was it? Where is it? Down, up, down. What's going on? Let's zoom in. Does it make sense? Where's it going? What's she doing? All good questions. Okay? 30 days ago, we're at 18, shoots up to 20, drops down here. Now she's going up. 1567. The 1550s go for 125. Let's check it out. If you like Kohl's. Well, I'm going to do it anyway. I like Kohl's. We're currently at 1750. No, 1550. Right there we go. Okay, one contract. There it is. Here's Johnny. Buy one covered call. Kohl's. 13 March. Next Friday. The 1550 call option. Well, it's paying 118 and it's only $1,400. That's a huge difference than the last one. $1,800. That's a lot easier than $48,000. Different game, different level. Actually, same game, different level. When I first started, I was looking at stocks under $10. Then I moved to stocks under $20. Now I'm looking at stocks under 400. That's it. I won't go over 400 at the moment. It's just a, what do you call it? Uh-oh. Bullish on parade. Remember using the newspaper, looking at 52-week numbers? Us Gen X rule, dude. Love the Gen X. It was an awesome time to be alive. Okay? I was the most neglected child out of all 6 of us. Hear me out. Hold on. It was 5 of us at first. My older sister, my older brother. My older sister, me, my younger sister. So guess what? Yeah, some of you got it right off the top of your head. I'm not the oldest, so I don't take priority. I'm not the youngest, not the sweetest. So I'm not a girl, so no. And I'm not the oldest son, so no. I am so low on the totem pole on my family, whatever you want to call it. It's a sad situation. But you know what? Growing up in the 60s and 70s, my parents didn't know where I was, nor did they care, okay? I was like in 3rd grade and roaming around the neighborhood with no supervision. Imagine that, a 9-year-old and a 10-year-old. At 9 years old, I was outside doing my own thing, okay? In high school, actually it was in, actually it was in grade school, 5th grade, because we went to elementary school, 1 through 5. Then 6 through 9 was middle school, and then, 6 through 9, and then 10 through 12, whatever it was, 9, 10, 11, 12. Wait a minute, no. 1st through 5th was elementary, 6th, 7th, and 8th was 9, 10, 11, 12 was high school. There you go, 3 different schools. And I forgot where I was going with that. Don't get old, it's no fun. That's awesome. $50,000 investment, make $1,100, no risk. I can do that. Hold on a second. That's awesome. There's no way possible did I say no risk. There is risk. Okay? Here's a couple of the risks. Number 1, most beginners lose money by hitting the wrong button. Sorry, as childish as it may seem, you will at some point in time hit the wrong button. That's number 1. Risk number 2, taking bad advice. That's risk number 2. It's actual risk. You can listen to people who don't have your best interest in mind. That's number 2. Number 3, you can get sidetracked and miss a deadline or a trade. That's number 3. Number 4, the corporation that you're looking at could go bankrupt. Okay? That's why I look at companies that are over 100 years old. Do you really think Coca-Cola is going to go out of business? Pepsi, General Motors, Ford, Bank of America, Wells Fargo, Hold on. Procter & Gamble, Lowe's, Home Depot, they have a good solid foundation. But there are risks involved. And the number one risk is hitting the wrong button. Yes, I've hit the wrong button many times. I think I even hit the wrong button this year. Anyway, let's keep on keeping on. Let's do the math on this one, see what it looks like. Let's get rid of that. The profit is 118. And we divide that by the investment of 1,432. And that gives me a grand total. I'm going to do this one again because that just doesn't make any sense. Hold on. Let's clear this. The profit, $118. Okay. Max profit, 118. Cost of the trade, including commissions and fees, 1,432. Let's divide it up again because it just didn't look right. Okay, 118 profit divided by the investment, 1,432. There it is. I was right. Okay, are you ready? 8.2% for 1 week. Now it's not a tip, it's not a recommendation, it's an observation. Kohl's is currently at $15.67. If I buy it first thing in the morning, $15.67. Then I turn around and I sell somebody the rights to buy it from me less than what I paid for it, $15.50. I'm making 8.2% for 1 week. And what has to happen? The stock has to stay above $15.50 by next Friday. Okay? Does it need to go up? No. Does it? It could stay exactly where it is or go higher, and I'll still make my 8%. Now, if I buy it on margin, I can make 16%. But I don't do margin unless you really understand the risks. Okay? So, 8.2. Yeah, I'm going to save that one. Hell yeah. Hell yeah. 8. I very rarely see 8.2s. I'm going to have to double check, see how much Kohl's I have, because do I really want to buy some more? There she is. Kohl's, 13 March. 15.50 call option. Look at the stock price. Currently $15.55. So if I buy it at $15.55, sell somebody the rights to buy it for me for less than what I paid for it, $15.50, my profit is going to be $118 per contract. So each contract I have, I'm going to get $118. And each contract is going to cost me $1,400. So if I get $14,000, I can get 10 contracts. And 10 contracts is going to be $1,100. Well, I'm okay with that. Right. Okay. So let's get rid of this. I hate it when it does that. Alrighty. Let's get rid of that. Let's get rid of that. Let's go back to here. Let's go back to here. And what do we have next? Technical and fundamental analysis. Absolutely. John, take a look at it this way. I like taking a look at how consistently the company's been profitable. That's number one. Once I get that list, I dive a little deeper into the list. Just because they're consistently profitable, I want to make sure the pricing structure is correct. How much money do they have coming in? What is the revenue per share? What are the dividends? How consistently have they increased their dividends? Stuff like that I want to know. But that's me. All right, we've got a bunch of questions. Here's today's list right here. Right here, right now. Watching the world wake up from history. 8%. Nice. There's our 5 right there. 1, 2, 3, 4, 5. Kohl's, ISRG, IBM, Macy's, and Starbucks. Woohoo! No, they're not tips. They are merely observations. Okay, you guys gave me stocks to take a look at. I threw the numbers together, and that's what it looks like. Not a tip, not a recommendation. You guys figure it out yourselves. Accountant. What does the other strategy pay, risk, etc.? Now, the other strategy is basically called dividend capturing. So you buy the stock just before the dividend date just to collect the dividend, and then you get rid of the stock for a small profit. For like 1.5% is the goal there. It's a little slower game, and you do have to wait for the stock to move. The covered call, you don't have to wait for the stock to move, and it's usually done in 5 days. The other strategy could be a longer play, but it's for people who have less money to play with, such as a matter of fact, Monday or Tuesday, we will be going live teaching for people who absolutely know nothing, and it's going to be live for a strategy for pocket change, okay? So 50 cents there, $1 there, 23 cents there, just throw it into a jar at the end of the week and throw it in. Say, hey, so you invest $1.50 a week, big deal. But if you compound it weekly, up until the point where you retire, that spare change can change into something huge. It's just a numbers game. Netflix, Verizon. Didn't we look at Verizon earlier? Let's check Verizon, VZ. Hell no. Why? Who came up with Verizon? PJ Cajun? It's at the high of the year, dude. Why would I buy anything at the high of the year? That makes no sense. Accountant. Why do I like it? Why do I like what? Oh, it's a simpler strategy. That's why. How did you choose the $500 call? I can't really believe you asked me that question. Seriously. I don't even know what stock that was. What stock was that? I can't believe you're asking me this question. How did I choose the 500? Which one is it? Right there, ISRG. Okay, let me show you how I chose the $500 strike price. You're going to feel very silly at this. ISRG. You ready? Here we go, ISRG. Here's the high. Here's the low. Here's where it was a year ago. Here's where it is now. She went down, she went up. She went down, she went up. She went down, now she's going up. Now, let's take a look at the current stock price. The current stock price, $196.70. 196.70, 196.70, 196.70. Why did I pick the 500? Well, the bid at this moment is $490. The ask is $505. So split right between the middle, between the $490 and the $505 and the $496, $500. It's right there. If I did the $497, let's check out the $497. Just for the fun of it. All right, let's get out of that. Covered call, and he wants to take a look at the $497s because he doesn't like the $500s. So what do the $497s look like? Here we go, the $497s. One covered call, ISRG, 13 March, exact same thing. The $497.50 call option. Profit, $970. The investment, cost of the trade, including commissions and fees, 48,780. So let's do the math. 970 is the profit. Divided by the investment, 48,780, comes up to a grand total of 1.9%. Okay, 1.9. What was the other one? Well, the other one, the 500, see, the 500 was 2.3. So the 497 is 1.9%, and the 500 is 2.3%. So which one would you choose? I'd pick the 500. It pays more. That's all. It's just a numbers game. 8 minutes left. What do we got? Let's take some questions. We already have our 5 stocks. Okay, we already got our 5 stocks, so let's answer questions. All righty. All right. Jonathan, how you doing today? Thank you there, Mr. Jonathan. What were those stocks again? Chat Taz, we just looked at that. Mad Manta, we'll take a look at it tomorrow, next time. El Conavria. Why do I like it? Because it's profitable. That's why I like it. What to look for if ISRG starts going down? A life preserver. Okay, is accountant. Let me explain to you again, because apparently you missed what I said earlier. Okay, rule number 1. Never buy anything you do not want to hold on to. So you do not buy ISRG if you do not like it. Plain and simple. Rule number 1, never buy anything that you don't like, you don't understand, or you don't want to hold on to. Plain and simple. If it goes down, it goes down. That's what stocks do. They go down, they go up. They go down, they go up. That's all they do. Mad Mantacoma. We have to look at Oracle next time. We got 7 minutes left. I got a whole bunch of questions to get through. Running gold. If you start Schwab in your personal name with a small amount, can you transfer to a business? Yes, but unfortunately with Schwab, you need a big chunk in order to do a business account. Okay, you have to wait till you get to a certain, what do you call it? A certain amount of money to have a business account with Schwab. Corporation, when you have more money, absolutely. How do you choose to strike? I just showed you that. Let's keep on keeping on. Katamatu, but does your money compound? Not really. Okay, my money doesn't compound only because, Katamatu, most of the money that I make goes to pay my bills. Now, it does compound a small amount, okay, because my monthly bills comes out of my trading account. Calabri, dude, how you doing? About time you got here. I'm used to seeing you here every night. MP, let's take a look at it later. Thank you, there's the accountant. MP, thank you. All right. Well, the 5 stocks, we already did that one. Nice explanation on the strike. So TOS does the math. Absolutely. Why would you want to hold anything that's not a winner? That's a good question. Corporate pension account, great Roth. It would really depend on your personal situation. Okay? And it depends on what state you're in and what other perks or whatever else you need to add to your corporation. Okay? You have to decide, number 1, what type of corporation it's going to be, what type of entity. Number 2, you have to decide on the structure. So it's very important to find someone that will walk you through it. Okay? And usually a tax strategist will be able to walk you through it. Okay, it's kind of strange because I do work with a few other people in different states, and their accountants and the lawyers will tell them some things but they'll say, all right, you can move from your personal account into a corporate account and you only pay 10% taxes. I said, well, why don't you just open a corporation in Delaware, Wyoming, or Nevada and pay zero taxes? Why incorporate in the state that you're in if you have to pay corporate taxes? It doesn't make sense because you're perfectly eligible. Do you still have Instagram stream? Calibri, I'm trying to see, Instagram changed their rules. I need to have 1,000 followers. It would be great if some of you guys can follow me on Instagram. But they won't allow me to live stream on Instagram until I'm up to 1,000. What time are you doing a small money investment tomorrow? Not tomorrow, probably Monday or Tuesday. Okay, I have a client flying in with his son, and he wants me to teach his son. So I figured, you know what? I'm going to get a couple other people that had no clue whatsoever, sit them all down, and we're going to do it live. I don't know exactly when, but as soon as I find out, hypothetically, sometime tomorrow, then we'll probably set it up for Monday or Tuesday. And then we'll probably live stream that event and take questions and stuff. Because it's going to be it's totally different, and we're going to do it on Robinhood. Okay, we're not doing it on Thinkorswim. But we could do it on Thinkorswim, but we're going to do it on Robinhood because it's simpler and easier. And this is for the younger generation. You know, the video game generation. If you can make trading fun on your little, on your phone, yeah. All right, Odom, so we shouldn't be looking to collect the dividend in this, right? Now, Stens, I didn't say that. I said we use the dividend to tell us when the stock is about to move. If we collect a dividend, it's just a happy coincidence. What is love? Don't hurt me. Don't hurt me. Yeah, Kevo, what is love? Yep. I don't remember who sang it, but what time you do? Okay. Calibri would love to do the same for my teen daughter. Okay, so we will be going live with that Monday or Tuesday, and then we're going to be chopping it up into smaller videos and putting it on YouTube, so it will be available, and we are going to create its own TikTok channel. So I'll be live streaming on 3 TikTok channels very soon. Why am I seeing your shirt and the screen backwards? Because you need to go to the doctor and have your eyes fixed. That's why. Be home when the street lights come on. Yep, I remember that. Well, see, the funny thing is, my parents didn't even ask me to come home when the street light come on. We'd be out all hours of the night, and my mother would have no clue. See, my dad abandoned us back in 66, so it was just my mom. And mom trying to take care of 5 or 6 kids at that age just didn't work over. Rise and thrive. Thank you so much for all the financial advice. Appreciate it. You're welcome. Mr. Steve, you too. All righty. Calibri art, thank you. What else we got? I think we're basically done here. We're done with these questions. Okay. Christo, what's happening? All right. I think we're done. There's no more questions. Utilico, show how you pull up the EX dividend calendar on Thinkorswim. Okay. In college, we said party until the paper comes. Interesting. Funny thing is, in my high school days, I actually delivered the paper at, we get up at like 4 or 5 o'clock in the morning, load up the van with all the newspaper. That was fun. Yeah, I was a newspaper delivery boy. Okay, so Utilico, you ready? Okay, this here, I have no idea what you want to call it, this vertical line here. No idea what you want to call it. We just call it the vertical line in the middle. This is the left screen, this is the right screen. That's it, the right screen, the left screen, blah, blah, blah. So where do you find the calendar? Okay. Monitor, trade, analyze, scan, marketplace. Click on marketplace. Okay. As soon as you put your cursor on top of the markets watch, quotes, alerts, visualize, financing rates, calendar, right there. So market watch, calendar. There you go. Now, the calendar, you can change your lists. Okay, come up right here with this ray of sunshine. Okay, you click on that right there and slide down to where it says personal. Okay, these are all my own personal lists that I create. So maybe I want to do just the Dividend Kings. Maybe I just want to take a look at the companies that have 10 years of increased profits. I can create my own list and it will come up when they pay their dividend. Now, the reason why I like that is because the dividend tells me when the stock usually moves in an upward fashion. So knowing that gives me a little bit of edge over my rival, so to speak, my trading. What's the best platform for starters, Robinhood or Schwab? Now, running goal, it really depends, probably your age or your capacity for complicated stuff. If you're a gamer, you want to do Robinhood. It's simple, it's easy, everything's right at your fingertips. Now, Thinkorswim has a lot more, let's call them doodads, for lack of better words, but a lot more perks to come along with it. It's got the dividend calendar, which Robinhood doesn't have. So we created the Google Sheets, which allows you to have a dividend calendar. Just put in the stock and it separates when it has its dividend. And yes, I know it's around somewhere. It's in one of my computers somewhere saved. I just don't know where it is and I don't know how to upload it. Stens, I feel like I could program this strategy with ThinkScript. I'll have to boot up the paper sim. I'd be interested in seeing that. All right, that being said, we're past 11 o'clock. I am done. You guys have a great day, and we'll do this all over again Sunday night. All right, have a great night, everyone. And now the end is near, and so I face the final curtain. My friends, I'll